Hey, what's up, everybody? It's Omar from the Bullish Bears team. Wanted to make a video talking about my swing trade strategy that I adopted. You know me. I like to keep things simple. And I've been messing around with the strategy for a while. I found it online. Backdrop of how I found it was one day. I follow people on Twitter who trade. So always get a good idea to see what other people are doing, what other people are watching. And there's this one particular swing trader that I follow, and she was talking about a golden cross, and basically like her strategy. I don't really understand it fully, but she uses, I guess, three simple moving averages: the 5, the 10, and the 20. And then what she does is she kind of runs. I don't know if she runs a yearly, maybe or yearly or a daily. I'm not sure, but she runs she kind of pulls up a chart, and I think it's a yearly, and she looks for when a stock, when the simple moving average, when the 5 is crossing above the 10 or the 20, then that's a buy sign. It's a confirmation sign to buy the stock. If the 20 simple moving average is dipping below the 15 or the 5, then it's more of a sell, right? And she gets these short-term swings based on that, right? And I kind of understood but didn't understand. So I just heard the term golden cross. I had no idea what that meant. I trade momentum stocks, right? So, I didn't know what that meant. So I looked it up, guys. This is what I suggest to you guys. You guys got to start putting in the work. So I Googled it. I Googled it like I Googled everything. And I Googled this, and basically I just went to Google and I said, moving averages for golden crosses. Moving averages for golden cross. Because I didn't know what a golden cross was. All right? And when I hit enter, this is what came up. All right? So, in the trading world, a golden cross occurs when the 50-day moving average rises above the 200-day moving average, right? And the reason why people talk about the 50 and the 200, because those are the most common moving averages that traders use for whatever reason, okay? I don't know what the catalyst for that is, but they just are, all right? But, so I looked at that, and I kind of looked through this, and I came across this article, Golden Cross, what is the best? So for me, I like to look at, information where there's some sort of data that supports it. Like when I adopted my day trading strategy, I watched videos and I saw in real time how things were happening, and then I kind of like tested it and after a lot of study, and I realized that stocks really do move on patterns, and I can kind of predict when to get in and out of a trade based on a pattern that's forming. So, I don't know anything about swing trading. Swing trading is going to be a little different. It's really more about indicators and less about patterns. Okay? So, what I read was, I read this article, and it goes into a study where they compared the 50-day moving averages, the simple moving average versus the exponential moving averages. So they took the simple 50 and 200 and then compared it with the exponential moving averages, which kind of gives you like a quicker time frame of what's happening in a real time, right? To make a long story short, right, you can go find this article, all right, etfhq.com, and it goes through this study, and they took a range of exponential moving averages versus simple moving averages. And to make a long story short, what they found out was that the simple moving averages are not as effective as the exponential moving averages. And the two best indicators to use are the 13 EMA and the 48.5 EMA, okay? Which you can, run. I have it here set up already in my Thinkorswim, or you can go to stockcharts.com, okay? And I already have in stockcharts.com, you see I came down here and I already set it up, my criteria. So I put a criteria with the 13 EMA, the 48.5 EMA, just like it says in the article. This is what I do. I have the RSI, I have the MACD, okay? They don't have a TTM squeeze here in stockcharts.com, but they do have it in Thinkorswim, which we'll talk about in a second. So basically, in a nutshell, this is very simple. So what I usually do, this is a daily time frame for the ranges for 1 year. All right, so I have it for a year. You click update, and it gives you this time frame. Okay, and if you want to zoom in and inspect, you got to check off that box. Make sure the inspect box is checked off so that you can look at things in more detail. So in a nutshell, there's two types of crosses. there's a death cross. A death cross is a sell sign. Okay, it means that you want to sell the stock. Uh, um, a golden cross is a confirmation to buy a stock. All right, so let's look at Apple. All right, just to give you just an idea of how this works. Okay, this is the 13 EMA. It's reflected right here. The red is the 48.5 EMA. Notice that this started trending down, and this is in April of 2015. On, let's see what exact day this is. On exactly April 26th, we got the actual death cross, meaning the 13 EMA crossed below the 48 EMA, which is the sign that you should then either short the stock or buy a put on the stock. And look what happened. Once that happened, look what happened to the stock. It went from $102 all the way down. All right, and this started on when? April 26th. By May 12th, this stock was at $89. So imagine had you had bought a put right when this crossover happened and held your put. Could have made a smaller fortune. All right, okay. Now shorting stock, shorting this, obviously it would be very, very expensive to short. So you're not gonna more than likely trade Apple and short unless you got the big dollars. But if you're an options trader, this is a tremendous strategy because you can buy a put. Okay, so and you can write this down. Now, when do you cover your position? Now so this is something that you're gonna have to kind of figure out yourself. You know, like, do you want to say, hey, if I'm up 5% of my entry, I just close out and cover my profit? Do I or cover half my position and see how much more it runs before I close my position? It's really up to you how you want to decide to do that. But if you notice, all right, it kind of goes up, right? So it found this is its support level and it starts gapping back up, right? And you notice, the MACD starting to curl, the RSI is overboard, so it's moving. But our buy sign for us is the golden cross, all right, for the swing, all right. But we haven't got that yet, right? You see the 13 EMA is still below the 48, and it runs up. And look, there's still no buy sign confirmation. And look what happens. It gaps up, but look, it pulls up all the way down to the 90 because we still haven't had the 13 EMA cross over the red. Now, I'll show you where the golden cross happens. So June comes, all right? And we still haven't got the crossover confirmation up to right here, this day, right here, July 18th. July 18th, this stock got the actual confirmation for the golden cross. And if you notice, on that day, it opened at 97, hit a high of 98. It closed at 98.36. The next day, it hit a high of 99.51. So you know what? If you got in on that day, you could have just, swung it and closed your position the next day. All right, if you wanted to. Or, you watch it pull back. But it pulls back below, right? The stock candles actually dip below the 13 and the 48. But it's still bullish because, remember, the sell sign is when the 13 EMA crosses over the red, which it doesn't. You notice how the 13 EMA here bounces off the 48 EMA, and look what happens. It's still bullish, and look, this thing just ripped. I mean, it had a day where it fell below it, but it still there's still no confirmation of the death cross because it's still running. And this thing, you could have held this. Look how this thing went all the way up to like $116. All right, until this day, which was on November 9th, the death cross happened. That's when the 13 EMA crosses over the 48, and look what happened over the next couple of days. So on this day, which was November 9th, it closed at 110, and look what happened over the next couple of days. All right, by the 15th, this thing it hit a low of 105, it closed at 106, so you would have made $4. All right, if you would have bought a put, you would have been good. All right, and then it kind of consolidates, bounces, the 13 bounces off the 48, but it doesn't close, and then it comes back down, and and then it's still short. And then look, the golden cross happened on December 9th. Okay, it happened there. It opened at 111. It hit a high of 114, closed at 113, and look, it's just been ripping ever since. All right, look at this. Apple now is at 144. It's that simple, guys. It's that simple. It's not rocket science. This is a super simple strategy. I've tested it on NUGT, in my paper trading account because I'm not gonna make real trades until I validate that this stuff really works. And right now I'm in Thinkorswim. I got NUGT open. I got the yearly chart open. And what I did was I created I created an actual study, okay, where I put the 13 EMA. So you see, I have the 13 EMA there. I picked my color. I have the 48 EMA here. I put 48.5, but it only looks at 48, so I just leave it as that, right? I have it as red, okay, and then I put the RSI, the MACD, and the TTM squeeze on the lower candles, and it has the parabolic SCR. You don't really need it because you're really focusing more on the moving averages. This is there. You don't really need it. I just have it, right? So so I have it as saved as a study, and look at NUGT. All right, so NUGT was so you see the 13 is above the 48, which is a bullish sign. All right, and if you're watching this, you theoretically could get in, but I rather look for an entry. And look what happens. It gaps up, it pulls back, but you see the 13 EMA, and let me just zoom in here so you can see. The 13 EMA bounces off, okay, the 48. This would have been an entry for me. This is not a golden cross though, because we've already been in the golden cross zone. And then it just kind of rips, you see it. And it was moving. This was like back in when? This was June. And this thing just continued to go up and up and up and up. And you see it never dips below the 48 EMA. It just continues to, it pulls back, but it never dips below it. And then we get the death cross right here. The death cross happens right here, this day, okay? Which was right here, which was the August 26th, all right? It opened at 23.55, it closed at 21.88, and look what happened the next couple of days. Then it went down, it closed at 21.92. Then it closed at, this closed at 21.88. Then it closed at 21.92. Then it closed at 18.76. Then it closed at 17.79. So had you bought a put, I mean, you would have been straight, And look, it's still bearish. It was still bearish. It never, you see, it kind of gaps up, but it touches the 48 and it continues on its downward trend. It continues on its downward trend. Look, it never crosses. We don't get a golden cross yet, and you're still in bearish territory. This thing got as low as 551, right? But then look what happens. It starts gapping up, and right here on this day, which was January 23rd, we got, okay, the golden cross. This thing opened at 10:43, had a high 11:45. It closed at 10:98. The next day, it hit a high of 11:07. I'm sorry, it hit a high of 11:64. It closed at 11:07, right? And this day, you could have just closed out your swing trade, all right? If you wanted to, all right? But let's say you're like, no, I'm greedy. I want to see what it does. There, you see how it starts pulling back, but the candles never dip below the 48. And really, even if it does dip, it normally it's gonna bounce back up. The real bearish sign is when the 13 crosses over the 48, which is what's called the death cross. Let me remove the drawing. So look at this. It had the patience. It continued to move. It went as high as 1370, and then it kind of pulled back. It kind of pulled back, and then right here on this day, which was March 2nd, you got the death cross when the 13 EMA crossed over. Okay, it crossed over the 48, and this is the day where you would either bought a put, or you would have shorted the stock. And this you could have shorted. Now, if you have a TD Ameritrade account, a E-Trade account, they'll let you short for like 3 days. After 3 days, they're gonna close you out. If you have an Interactive Brokers account, if you could short this for as long as you want, but they're gonna charge you interest every day you have you hold your short position. And you could have shorted, let's say you shorted this for the 3 days and got in here. This thing, let's say it closed at 965. The next day it closed at 829. The next day it closed at 857. You would have had a nice chunk of money, okay, there. All right, but look, it could have continued to reshort this. All right, it continued all the way down to $7, And now we're watching this, and it kind of comes up, it's sideways, and look what's about to happen with NUGT. NUGT is about to do a golden cross. We don't know. I don't know if it's gonna happen. Look at where the 13 EMA is. Look at where the 48 EMA is. Look how the 13 is curling. All right. Look at the TTM squeeze popping. Look at the MACD. The green is going above the red. So if this stock crosses over, all right, the 48, that is a very bullish confirmation, and we're gonna see a rip on gold. All right. And that's when you do your swing trade. You buy your shares on that same day, okay, and you hold it. Now as for how long you hold it, that's really up to you. I don't have an exact, I can't give you an exact time frame to when to sell it, other than to know that once the 48 goes below the 13, you better get the hell out, all right? Because so once this happens, you gotta absolutely get out of your position. But I would say if it was me, me, I like to take quick profit and I like to stay in the green. So what I'm probably gonna do is buy on the day of the cross, hold till the next day, and if my stock, if it's up maybe 5%, 10%, I may take like half my position or 3/4 of my position, and then let the 25% of the remaining 25% of my position ride to see what it will do, so I can lock in profits. This is a winning strategy, guys. I've done this with several stocks. Every single time I do it, it worked. Every single time, all right? Now, in terms of how long, the confirmation lasts, that varies. That's the thing you got to be afraid of, especially if you decide to do this on like a dog shit stock. You can get a golden cross that happens, like, for example, so the golden cross happened here, but I've done it where a stock will have the golden cross last maybe 1 day. So you get in on the day, the next day it has a pop, and then it starts pulling back, and then it just kind of collapses. So, you got to be careful on how long you stay. What I noticed, stocks with a lot of volume, especially the more expensive stocks, this tends to work well, and the runs tend to sustain themselves. Look at BBRY, for example. BBRY is a stock that's been moved. It's been on my watch list the last couple of days. I hope you've been trading this because you would have been making money. But look at what happened here. Let's talk about from January. Let's talk about. I'm gonna do year to date for this chart. So I'm gonna go. Let's go here, intraday, and I'm gonna go daily, year to date, daily. All right. So we can see what happens here. So this was already in a def cross, sell position, because you see that the 48 is above the 13, right? So you see it gapping up, but it touches the 48, goes out, touches the 48, comes back down. It goes above the 48, but then look, here's the actual, so right here, right? So this is what I want. This is I'm glad you see this because this is proof. Right here, you got the actual def cross, right? It happened on this day, which is on the 16th. This thing, this stock opened at 740. It had a high of 743. It closed at 735, right? So this is the confirmation. On this day is where you would have put your position in, right? The next day, this hit a high of 750. So if you would have got in a higher day, which you never want to do, but let's say you would have got in a higher day, 743, you only would have made about 8 cents here, all right? It did pop. It did what it was supposed to do, all right? It popped, but it only hit a high of 750, and it closed at 749. So you would have made profit, but look what happened the next day. It hit a high of 752, but it started pulling back, and look what happened the next day. The def cross happened. The red, right? So the 13 EMA crossed over the 48, and then it just would have been a tremendous short, all right? And then it kind of gaps up, and but you see it's still bullish, it's still bearish, all right? It's still bearish. And then look what happens here. So it stays in the bearish zone where you got let me zoom in more. You got the red above the blue, right? Which is the 48 over the 13. And it's sideways, but look what happened. You got the actual cross on March 31st. Look what happens. You get the MACD crossing, the TTM squeeze, and look what happened the next day. So on this day, if you would have got in for using that swing trade strategy I taught you, right? You would have got in. The high was 808, the low was 747, the close was 775. The next day, the high was 789, the low was 752, the close was 780, right? So this closed 775. So this still closed 5 cents higher than this day. And then the next day, boom, look at this. If you stood in, you know, it's at 820, all right? And it's above the 13 EMA, all right? It's kind of high, and I expect it to pull back. But look for this. If this thing bounces off the 13 EMA, then I might take a swing trade on this, all right? But really, what we want to do is find the stocks as they hit this, and that's what I'm struggling with, guys. I'm working with Dan, Tim, and Lucian to kind of like with Thinkorswim and with trade ideas, and I'm trying to use stocks to trade to try to find the scans to have it pop as that golden cross is happening. I want it to pop up right when it's happening, so then I can look at the stock and take my swing trade, or like right before it's happening. So for example, Mac, which is a stock that actually popped up on my scanner. Okay, this is in a bearish territory. Look how extended it is. See the MACD, the red is over the green, the 48 is over the 13 EMA, and this thing has just been in a downward selling trend, right? And we haven't seen the cross, but look what's about to happen, guys. If you look at it, look how they're getting closer and closer and closer, and look what's happening the last couple of days. The MACD, it's hard to tell here, but the MACD, look, it's crossing. It's the green is crossing over the red, all right, on the daily, and look at the TTM squeeze. It's going from red to yellow, which means it's reversing. And look at the 13 EMA. It's curling, and it's getting close. So you know what? This stock looks like Mac. Looks like, and we can look at the yearly chart. It looks like it's about to pop, all right, in a couple of days, all right. So keep it on your watch list. So let's see what happens. Now this is the criteria that I've been using. I created a criteria. So when I go to scan, I put 20 cents and $50 just to see. I'm using a low volume right now just to see what's coming up. Usually I wouldn't look at a stock unless it has at least 300, 400,000 shares minimum trades daily. But when I do this scan, right, and I put the study crossover, so I do the 48 period and the 13-day period, okay, when I click scan, I'm only getting these 4 stocks, you know, and I got VGZ, and you know these other stocks don't have really any volume, you know, so I'm trying to mess with this. I don't know if this should be 48 as well. I don't know. So I'm not really sure yet about the actual study. I know Tim has something already. I'll have him post it, and I'm just still working on the scan. What I basically do, guys, you see, and when I do it like this, nothing comes up yet because it's supposed to be 15-day period. Yeah, so yeah, I do that, and nothing's coming up. So I gotta mess with this to figure out. Now these stocks are, let's say if I looked at, I don't know, let's say VGZ, which is a gold stock. I go to charts and I type VGZ, and you know you can see that you know this thing has been in a bullish state for a while. Back in last year of May of last year, and you know it kind of ran, and here was the golden. This is where the death cross happened on August 10th. 2016, and look, this day it closed at 119, and then it just continued to collapse. This thing went as low as 87 cents, you know, and then it went lower than that. It went all the way down to 87 cents, and then went down to hit a low of 85, and it kind of been sideways. You see, it never crossed above it. It just kept tapping the 48, and right here for a very short period of time, you got the golden cross. And just for a day, this thing went from, it closed at 99 cents on this day, and on the next day it hit a high of 105. Like, it's, you know, this stock doesn't have a lot of volume, but it did have, but it, you know, it's funny, right? It's still bullish though. Look, on this day, which was January 3rd, the 13 EMA never dipped below the 48. So you could have stood in this entire time, and look, eventually it popped. By September 9th, it was worth 122. So, you know, it seems to work. You know, sometimes the pop happens quickly, sometimes the pop happens later. But when the golden cross happens, you know, as long as it doesn't cross back below, And all signs point to that it's gonna pop, and it does. It pops, and then and then it kind of it stood bullish, and then right here was the actual def cross where the 13 crossed over the 48, and it went from 95 cents down to a close that hit a high of 98, hit a low of 92. Then it kind of bounced back up, but it didn't cross over. It's still sort of like in that bearish territory. And then look what's happening here. Let me zoom. Oops, let me zoom out a little bit. Sorry, guys. According to this, yesterday it hit the golden cross. It's so hard to see, and it's probably going to be hard to see on the video, but you can check for yourself. The 13 crossed over the 48, and this thing on this day it went from 102. It closed at opened at 102, closed at 105. Then this thing hit a high of 107. It closed at 104.76. That's why it's ready. But the high of day was up, so it popped. I mean, it's adhering to the strategy. Maybe this continues upward. Who knows? Who knows when that pop's gonna happen again? But what I would suggest is, until I figure out the scanner that's foolproof and works, what I will suggest is you can pull up this study. And you can do like a year to date, right? So I would go, go to daily, go to year to date, go to day, and then what I would do is look through the biggest movers of the day, and see if any of these are about to cross. Like TGC, this has been bearish, but it had its first bull day. This thing went from 39 cents to, from 3 cents to 8 cents today. It is dog shit, but look at it. It's starting to gap up. It's starting to connect. Maybe there'll be a cross, and maybe it continues to run. CLY, same thing. Look, it looks like, look at right here. Look at OHGI. Today looks like it's about, tomorrow looks like it's gonna cross. All right, it looks like it's gonna cross. Look at the MACD. Look at the 13 and the 48. Look, it's about to cross. MACD just spiked up. See what happens. Put it on your watch list. Put it on do a virtual trade on it, on a paper trade. See if it works. See if it actually continues up. INNL. Look, this thing was already in, this is when the golden cross happened. It happened on this day, which was on March 15th. Look what happened the next day. This thing on the 17th, this thing went to 258. So had you got in on this day where the cross happened, okay, the next day, look at the pop, and then it kind of pulled back, and but look, it's the 13 kind of bounced off the 48, and it's up, and look, looked like it's running again, it never dipped below it, and if you look at the MACD, the green is over the red. You know what? Check to see. Maybe this is a potential swing trade. Maybe this finishes higher tomorrow than it did today. That's the sign. That's what we're looking for. So you can run through your stocks and see when the confirmation. So like, for example, this stock, it was already in bullish territory. Is in bullish territory. It kind of pulled back, but it kind of touched, and look, it's gapping up. BMTC had a move. This is a stock I traded today. All right, ship. Look, and you just look. Nah, it's still not. It still has to curl. It still has some more to go before the curl. It's dog shit too, just so you know. CONN, CYCC. Look, the cross happened. Look when the cross happened. The cross actually happened on. This happened on yesterday. All right. So if you'd have got on this yesterday, okay, and this opened at 659, it hit a low of 412. It closed at 642. Look what it did today. It went to 1090. So when the cross is about to happen, once it happens, you get a pop. You get a pop on the 48. Yeah. So you can just look to see where it's at. Like, for example, RAN, it's too far extended for me to the cross happened somewhere down over here, and it's so far extended. So I wouldn't get in this unless it touched the 13 EMA. Like if it touched and bounced off it, then maybe I take a swing on it. But so you see, like, look how it gapped up and then it came back down. Look what happened. Right when it touches here, it kind of held here. This is somewhere here. I would have maybe took the swing and held it to see what it's gonna do. and then I would have got out once it dipped below the 20. All right, but look, you see, and then it kind of gaps up, it pulls back, but it's still riding it. Gaps up, pulls back, it's still riding the 13. So you know what? I'm gonna wait for a pullback. If this thing pulls back and it touches the 13 EMA, I may make a swing trade on it. All right, and that's how you gotta look at these. See, this is a stock that's too bearish, right? I would not take a trade on this. All right, you know, it's below. Maybe you buy a put, but I want to get in right when the cross is happening, not after the fact. All right, look at this. Look at the YGE. It's looking like it's ready to cross, you know, see what happens. Look at the MACD. So that's really what I wanted to talk about. That's really my swing trade strategy. Look, DFFN. Look, the look like the curl's about to happen. If it happens, you put a swing trade. See what happens. See if it's gonna pop. DFFN. Tomorrow, it looks like it's gonna. According to this, either tomorrow or the day after, you could expect a pop, you know? So, you know, if that happens, if you see the 13 cross over the 48, you take a position size in it, you know, and see what happens. So that's my swing trade strategy, guys. You just, you know, I'll figure out a way to get the scans to tell us, like, right when the curl's about to happen, and then I'll post them on my watch list so that you see, look, this is what happened. Like, we want to get in, like, right as it's happening. Look at PSTI. Look what happened when it popped, when it crossed over. Here it went from this thing closed at 135. Look at the next day. It had a high of 155. It closed at 147. You may see a continuation on this. All right, or maybe it pulls back to the 13 EMA. You know, maybe it completely reverses. So, you know, but we want to get in as close to that actual crossover as possible to secure our position in the event it goes against us. You want to get as close to support as possible. All right, folks. So this is my swing trade strategy. All right, I've been using this. I've been catching stocks as they cross over, and every single time I've done it, with the exception I think of one time, it's popped. It's always pops. Doesn't matter what stock it is, the price. It could be dog shit. It could be a great company. It works. But this really works better with like the really big stocks like the Apples and the Netflix and all those kind of stocks. So for you options traders, you should be salivating at this strategy. I think it's useful and it works. All right, folks. So it's simple. I think it's effective. I hope this makes sense. I'm gonna post it. If you have any questions, let me know, and I'll see you guys in the